Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday, the 1st of November. And what a way to start the 1st of November. First of all, can the Greek government survive? We doubt it. The Greek Socialist Party, led by Prime Minister George Papandreou, once again threw the world of finance and trading into turmoil. The news that Greece is going to hold a referendum in January to vote whether or not to stay in the euro or face chaos was for sure a political move. Here's the question I'm asking myself today. If you're a Greek citizen and the government wants to take all of your benefits away, which way would you vote? My guess is they just say to heck with it and say we're not going to pay back the money we owe you. I think that Greece has already psychologically defaulted, and that will lead to further contagion. Italy is the next one in line, which presents a much bigger problem for the world. So here we have the month of October producing some of the best monthly gains ever in the equity markets for that time frame, and we start out November 1st getting beaten over the head by this little country in Europe. What does concern me is if you have a company like MF Global declares bankruptcy based on sovereign debt, how many other players are out there hanging on by their fingernails? MF Global was not a huge player, yet no one knew about their derivative exposure. How many other players are there out there that have derivative sovereign debt problems that no one knows about? As we have stated for the past week or so, the longer-term trends in the equity markets are still negative based on our monthly trade triangles. Same holds true for the crude oil and CRB commodity index. The only markets that we see in positive modes at the moment are gold and the dollar index. Okay, let's go to the charts to see how we can create and maintain your wealth in 2011. We have a lot to cover today. We're going to cover more charts than we normally do because there's so much going on in the marketplace. But be sure to watch MarketClub TV tomorrow, Wednesday at 5 p.m. You can call us at 410-867-2100, extension 129, and leave a question for us. We'll do our very best to get it on the air. Or you can email us at marketclubtv@ino.com, and we'll read your question out loud on the telecast on Wednesday at 5 p.m. So be sure to check that out. We'd love to have you come in and participate in the show. It's a fun thing, and we'll talk about it then. But here we are. Here's my homepage, Adam Hewison. You can see it right around 1 o'clock. I'm going to actually go to my portfolio manager and going to go right here. We've got a lot. These are the markets we'll be covering today. We're covering our major markets. We cover the 6 markets. Then we'll be covering Citigroup, which is a bank under a lot of pressure today, Bank of America. We'll be also looking at SDS, which is ProShares Ultra Short the S&P 500, and also the EUO, which is an ETF short the euro. Interesting markets today. Lots to cover. Let's get started. First market we're looking at is the S&P 500. This is not going to be a good close. Under the 1220 level on the S&P is negative, in my opinion. That'll be a new low close, probably the lowest close in about 8 days. You're also triggered a move in the parabolic, this one here. This little indicator we've got here, these are default settings we're using, but you may remember, excuse me, you may remember we said moving out of the Donchian trade channel last week was not necessarily a good sign. Certainly the doji line we talked about, and yesterday's sharp down move followed by today's sharp move down. If we close below, let's say around 12.18, I think it's negative. You're also moving down in from an overbought situation. That's not a good sign. And you're also getting very close to turning down on the MACD, or the MACD indicator, which turned out pretty close to these levels. But turning down now would not be a good sign. I think that's something to pay very, very close attention to. This market looks like it could be a little bit negative for the next several weeks. So please be careful with your trading on that market. So next market, this is silver, spot silver. Again, the key level there is going to be the SAR, which is 31.62. It's about $1 lower than we are right now. Don't have a strong feeling on this market. We've got very mixed trade triangles, and I think that's the one thing I would really look at. Downward trends, longer term, intermediate term, uptrends, mixed daily. I think a 55 kind of gives that a trading range, and I would treat it as such. So I think that's what I would really look at there. So let's go to the next market, which is gold, which is really something really important here. We talked about the 1700 level in our update in terms of being a very key level. We certainly got down there, but gold is a different picture. We've got the intermediate and the longer term positive. It's a plus 85 as opposed to a plus 55 for silver. And the only one that's negative short term is the daily, which is not so important based on the longer term traders. If you're an intermediate term trader, you should probably just be out of the market right now, or a short term trader, I should say. You should just be out of the market. Intermediate term traders, longer term traders stay long gold. It looks as though this market is trying to tell us something on the upside. So let's go to the next market. Next market is the copper market, which we just started including. And you can see the copper market closing here, I think below 3.50. In copper, we would view that as a negative right now. The market is in a trading range, so you have a longer term negative, intermediate up, short term daily down. So it's a mixed picture trading range. I would say if we close below 3.50, I think we'll see more pressure coming into this market, particularly if you see the equity markets close below the 1220 level basis, the S&P 500. The reason for that, if we see a lower industrial we see an industrial contraction, S&P going down, means slower demand for copper. And also, China is telling you that to a certain extent. So I think this market's going to be on the defensive. And let's go to our next market. And this is going to be the crude oil market. We've been talking about this. I'm going to put my telestrator on here. But we've been talking about the crude oil market and what it's been doing. And I think really you can look at the highs we talked about, which was right around here. We said between the 95, this area right around here, to 100 would be resistance. Well, we certainly have that resistance coming early. We've turned back down. This is the lowest the market's been in about 6 days. If we close below 90, again, if we come down here and we close down here below this area, I think that will be a little further negative. And again, this is going to be really demanding on the S&P 500 below 1220 there. It'll probably put more pressure on there. But these markets really aren't rallying. It's 1 o'clock. We have 3 more hours to trade in the equity markets. And there's really not a lot of enthusiasm to push these markets up. There's still a lot of problems in Europe. As I said, we think Greece has already defaulted psychologically, and we'll see this market come under further pressure. Again, we are plus 55. Meaning the longer term is down, the intermediate term is up, and the daily is down. So you've got really kind of a mixed bag here indicating a trading range. Oops, and I think that's what's going to really hold this market in place. So let's see how things work out, but watch these levels. We were talking about the 90 level here, the 1220 level on the S&P 500, in the 3.50 on the copper market. So let's clear everything off the screen and go to our next market, and that's going to be the dollar index. Now, we talked about the dollar index, as you may remember, and this is where these long-term indicators are so powerful. Here's the long-term indicator, and we talked about the market, and we're going to be looking at an ETF, by the way. You can trade against the dollar or for the dollar, but we're looking at that just in a little while. So here we have the longer-term monthly up, the daily up, and the intermediate down. Kind of a mixed picture. It's a plus 65. We thought the market would get back to 78.50, which is probably going to be the top of the Donchian trade channel for now. But generally speaking, the market has made a pretty impressive turnaround. If we take this off the screen and go back to some of the other indicators we watch, you'll see what I mean. So we clear that off, and we'll go down to here. We're getting very close to turning around. In fact, I would say it probably has. It may close today in a positive mode. And if that's the case, you may see this market actually go much higher than we even am looking for right now. Would not be rule out a big move to test certainly the recent highs of 79.50, 80. But for the most part, we are looking for 78.5, which is our near-term target zone for this market. Let's go to our next market, and the next market is going to be the CRB, the Reuters-Jefferies CRB Index. And this is going to be a very important level. I think it's around the 311 level. If it closes there, it'll ignite the parabolic, indicating further weakness. But again, we felt this 325 level, which we outlined in our, it is, and this is why I want to show you this. We talked about the Fibonacci tool. You simply pull it down to here, and look at hits it right on the nose, and look at how this market reversed. So certainly the 311 level is going to be very important, and then of course the 304 area, which is right here, is going to be another key level. Excuse me. And let's go to our next market. And these are what we're looking at right now. We're going to be looking at some other markets. We're going to be looking at Citigroup, Bank of America, ProShares ultra short the S&P 500, and ProShares ultra short the euro. These are leveraged ETFs. So let's go first of all to Citibank, which is under a lot of pressure today. And we'll get that coming up right now. It's a plus 55, so we automatically know it's a trading range based on our trade triangle technology, meaning our longer term is negative from 43.40. Market's currently trading around 29. Intermediate term, positive, 28. And short term, very short term, negative from 31. So you can see basically the markets are really kind of rolling over. You've hit below the parabolic, another negative indication. I think this city is going to be under pressure for the rest of the month, and we'll see how that plays out. But generally speaking, this is not a good sign for Citi. And if we go down here further, we can see we've come from an overbought position. Remember all the euphoria that was taking place last week, even on Thursday and Friday, about everything's wonderful in Europe? Well, it turns out that was a little bit premature. And then here, watch this very carefully with the MACD turning over. If it closes below the red line, the blue line closes below the red line, then I think we're going to see more pressure on this market. I just don't think it's over with yet to the downside. Even though this looks like a doji right now, we still have 3 more hours left to trade in this market. And I think we'll see, if there's no rallying power, I think we'll see more and more pressure come in as the day progresses. So, excuse me. I have a frog in my throat. So let's go to the next market. Bank of America, same pattern. It looks like it's turned over. I think probably Citibank looks a little worse at the moment. But if you go down here, overbought, pushing down, getting close to turning around. So these markets aren't looking good, in my opinion. And if you think that this market's never really gotten anything going on the upside to any degree, this area right here is going to be very, very key. And that area is the level 603. A move below 6, I would say, would be very, very bad for Bank of America and indicate a move probably to test the lows or to make new lows. So let's go to the ETFs we're talking about. We're talking about 2 ETFs, and the first one is ProShares, the SDS, that's short the S&P 500. So that means the trend should be going up if you're short. And sure enough, here's the move. It's showing, now this is where you really want to be careful with ETFs, because reality is short. It's showing the monthly and the weekly as being negative. Now, you have to remember, the underlying concept behind this particular ETF is the S&P 500. Now, if you look at the S&P 500, we have a negative signal there, and this is the inverse. So we should have positive signals. Why do we have red triangles on both the weekly and the daily? Simply because this is a leveraged ETF, and you want to take your cue from the actual spot, which is the S&P 500, the actual cash index, as opposed to the futures, or as opposed to this derivative, this ETF derivative. So here we are. The market looks as though, if we take this off for a second, you can see we sort of left an island bottom. Now, last time we talked about an island top was on Apple Computer, and we'll take a look at that if we have time. But you can see the market is really closing very well. I would say if it closes over 2150, I think you're in really good shape in this market, and I think you'll see this market do better in the weeks ahead. So let's go to our next market, and the next market we're looking at is going to be on the euro, short the euro, and obviously this is looking a lot better. You can see another island bottom. Now these ETFs, we've talked about ETFs, they tend to get very thinly traded sometimes. You can see the gaps between them. So if you're not comfortable with that type of market, then don't trade these type of ETFs. But generally speaking, the market has created an island bottom. We had a strong move up yesterday. We were thinking that the euro has gone too far, And I think this is going to be, I think the euro can go substantially lower because I think I think all of Europe is going to probably have contagion and implode, and everyone's going to pull back. Like the Greeks will want to go back to the drachma, the Italians will want to go back to the lira, because then they can print their own money. They're not subject to this discipline that they're just not used to. So remember, this is an island bottom, pretty unusual to see on charts. You don't see it that often. But the other thing I wanted to show you, and we talked about this last week on the TV show, and I'll just put this in for you, and that is, I'll put in the logo for Apple, or I should say the symbol for Apple, and there it is, Apple, and we simply double click here, and there it is, and we go to the chart. Now Apple is at 55 trading range. Interesting, huh? So here we have, there's the island top. Does that look familiar? It's just the reverse of an island bottom. Very, very unusual, particularly with a stock like Apple. Now here we have, this is the key level I would be watching in Apple. It's going to be the 390 level, where it's currently trading at 394. If we go below there or close below 390, I think this market's going to have some further move down to maybe the 360, 350 level. But generally speaking, this market is looking a little bit toppy. You've got a potential in Apple. Now I know people are going, I love Apple, by the way. Let me just state that up front. I love Apple. I think it's a great company, great products. But sometimes it doesn't matter because the markets tend to change. Now here's a potential double top, and this is a potential pivot point. These are markets we want to watch this formation watch very, very carefully, because if you go below here, we're talking somewhere in the region Apple going down to $300, which seems almost unheard of, but that's the reality. This is the level to watch, which is $390 a share. If we go below that level, it's going to be under pressure. No question in my mind about that. So you have to remember, a lot of mutual funds, their year ends on the end of October, and I think that was one of the reasons we had a big rally to make everyone look good. But here's another month, and a lot of people are trying to catch up this year, both hedge funds and other folks. So lots going on. I really hope you have a chance tomorrow to see our show. We'd love to have you call in and talk to us and see what's going on, literally, and we'll look at that. But generally speaking, give us a call at 410-867-2100, extension 129, or you can email it, marketclubtv@ino.com, and we'll do our very best to get your questions on air. So, hey, this is Adam Hewis. Now, I'll be back tomorrow at 1 o'clock, and then we, of course, we'll be back at 5 o'clock with the weekly shows. So have a great day trading, and watch those numbers we talked about.